Hey guys, welcome back. In today's video, we are talking about the AMC merger, shorts increasing, the economy collapse, and many more in this video. Firstly, we're taking a look at this. In Q3 2024, AMC theaters closed 11 unprofitable theaters. With the Cineworld merge rumor, AMC could keep the profitable theaters of Cineworld, restructure the overall debt, and shift the due date. Bankrupt rules allow to smooth debt and bypass a lot of former engagements. So whether you're looking at Q3, whether you're looking at Q4, one thing you will understand from AMC and what one of their current strategies are is to close down unprofitable theaters and then open up theaters in locations that have been proven to be profitable. And that's exactly what they've done. We talked about the 60 new theaters in which they opened and then the 180 theaters in which they closed and the amount of money that they have brought in, which obviously allows us to understand the efficiency, of course, of the management at AMC. And now what we have is the Cineworld merge rumor. So if you guys take a look at some of the news that are obviously out there, some of the things we've seen is of course talking about in the UK and talking about how they could be looking at to be merging with AMC. Now, firstly, you have to understand that this is of course still a rumor. There is no confirmation on this whatsoever. But the reason why this is a potential, the reason why there is possibilities is just like what we talked about. One of the AMC strategies are obviously to open up more profitable theaters. So if that's what Cineworld has to offer, then what we can be looking at is obviously AMC to do that. Remember that AMC still has around $600 million in terms of cash. They still obviously have the ability to incur more debt if they wish. Now, I understand that debt is obviously a big problem when it comes to AMC. It's a big problem that is obviously worrying people. Despite what AMC is doing, we talked about the restructure of debt. We talked about the decreased payment in interest rate. We talked about how they're paying off debt. But again, I can understand why it's of course a issue for some. But if that's what AMC wishes to do, if they are able to merge with Cineworld, if they are able to get more theaters that are profitable, which increases their revenue, which increases their profits, which increases their cash pile, then obviously that would be a wise move to make. And so that is something that we could be looking at for the future of AMC. And so again, it is a possibility, but it's something that will obviously, I think, benefit AMC. Now let's take a look at the opposite, what the short sellers of AMCs are doing. So AMC's obviously put their money in good places, improving their company. But when we take a look at the short sellers of AMC, you can actually see this. Virtue Financial reported a fair value of $6.44 billion of financial instruments sold not yet purchased in its 2024 annual report. So these $6.4 billion in short positions are in part a result of merchant market making activities and represents an increase of $369.619 million year over year. So one thing you'll realize for Virtue is that seemingly they are increasing on their short positions. And this is what we have seen in the past. Year by year, they have increased their short positions. But along with increasing their short positions, there are some other aspects you have to pay attention to. Firstly, the revenue and the profits are actually declining in Virtue. Another thing that's increasing is the loans in which they are taking, the debts in which are going up. Those are increasing. So Virtue are in a position where their short positions are increasing, their debts are increasing, but yet their revenue and profits are going down. And so when you take a look at that, you'll see that the short positions, the short sellers of AMC are just not in a good place. Now, it isn't a surprise when you understand in terms of what's involved with AMC, like something we've seen in the past. 555 million shares unsettled in the DTCC, 9.6 billion notional value of all shares unsettled, with the average combined price of shares at 872, shares held back as far as 2018. And so just in 2021, you can see we occurred over 8 billion. So you can see that during 2021, during the whole phase with AMC, they have obviously racked up an insane amount. Now, this is all we are seeing in the DTCC, in which are settled. Again, there are of course multiple out there. We've talked about, of course, the offshores. We talked about the tokens. So there are so much more out there. This is just looking at what numbers in which we can see. And so when you see that this is the sort of situation, it isn't a surprise that we are seeing short sellers increasing their short positions, nor are we surprised that they are, of course, decreasing in their profitability. Now, another thing, and this is taking a look at the commercial real estate crisis. So this is a big problem to be looking at, because you have to understand that a lot of large institutions actually have a big part of their portfolio in commercial real estate. Now, the worrying thing is in which the discount, in which the decline commercial real estate is having. So bear in mind that a lot of them bought obviously commercial real estate a very long time ago. They're using it as collaterals. Is one of the things that is offering them the value in which they have for the capital to use on other areas. But when you take a look at how these values are depreciating, 2 Manhattan offices buildings in 2017 sold for $157 million. Now the very same sold for less than $50 million in 2025. So a decline of over $107 million. Now, this is just highlighting 2 particular buildings. Remember, there are of course far more, but when you understand that it's a 68% quote unquote discount, it's also a 68% decline in how much asset value in which they have. And so this is what we talked about with how we're seeing the collaterals of all these large institutions falling, as we're seeing that some of the ones that they used in the past are like commercial real estate are of course declining. Another thing, US banks just racked up $118.4 billion in unrealized losses in just 3 months, and the FDIC just put 66 banks on the problem list. This isn't just cracks forming, this is a full-blown structural fail. Liquidity is vanishing, swaps are unwinding, and counterparties are on edge. And so when you really want to understand in terms of, how are these institutions going to hold up? How are these short sellers still able to get more money? How long is it going to last? Well, we can take a look at this. The very fact that this is how much unrealized losses they've racked up, and 66 banks are on the problem list. This is what we've seen. We've seen how the swaps are, of course, unwinding. We're seeing how liquidity is going down when you take a look at the reverse repo. We're seeing how certain counterparties are, unhappy with what some people are doing, are unwilling to be taking up some of the risk in which in the past they were willing to. This is what we are seeing. And so this goes on to talking about, in terms of how shorts don't have the easy access to liquidity like they once had, and that's how they are not able to get the money to obviously short AMC. Now, one big thing to focus on is that what we are seeing is how they're racking up billions in losses. What they're not showing on their financial sheets are these very losses. When you take a look at the financials of these banks, what you'll see is that they're saying that they are $100 billion in profit. And that's because they are. And that's because the key word here is unrealized. You have to understand what they're reporting are, of course, the realized. And so when you realize 50 billions in profit, but you have a floating position of over $118 billion in unrealized losses, it doesn't matter, because you're showing that you've made $50 billion in profit, when actual net is that you're down 60-70 billion, but that's not what they're showing. And so that's the things you have to focus on. Are they actually doing well, or are they just trying to show a fake, image of them doing well? Another thing, if we report this economy will collapse, Fed say no more, you've got 1 year. 1 year later, we didn't do anything to fix it, say no more, you've got 2 years. And 2 years later, it's not going to happen, can we just make it permanent? Now, this is obviously talking about in terms of the US Treasuries, in terms of delaying it. And it's a very worrying factor, because we've already seen signs of this in the past. And one could argue that the same signs we're seeing back in 2008, we're seeing this now. But when you take a look at this, and we just talked about $118.4 billion in 3 months. Remember, they have delayed this for years. So if this is how much loss they can occur in 3 months, think about how much money they've lost and occurred in the last 3, 4, 5, 6, 7 years. And so that's what they are doing, and the Feds aren't doing anything about it. So if you're worried about the economy, this is what you should be focusing on. This is the sort of things that you need to be looking out for. You need to be keeping up to date to. And so if you want to understand, do shorts have long time? No, they don't. In fact, I think the clock is ticking. I think at any point, their liquidity will be cut off. They will be recalled in terms of their loans, and therefore they will have to cover their positions. But yeah, guys, that's it for this video. I'll catch you guys next time.